Welcome to this joint overview and scrutiny committee meeting. I'm Councillor Keith Wellham and I'm chairing the meeting today. May I first of all remind you of some domestic arrangements. Please ensure that microphones are turned off when not in use. Do not interrupt other speakers. If you are attending the meeting, you may to speak and persistently interrupt the meeting, you may be asked to leave. Please ensure your mobile phones are on silent or switched off. And that also applies to laptops. Can you turn the volume down on your laptops as well, please? And in addition, we will be using the e-voting for this meeting on the modern.gov app. I'd like to remind everyone present that this meeting will be broadcast live to the internet and will be capable of repeated viewing. The whole of the meeting will be filmed except where there are confidential or exempt items. If you make a representation to the meeting, you will be deemed by the Council to have consented to being filmed. By entering this meeting as a speaker, you are also consenting to being recorded by the Council and to the possible use of those images and sound recordings for webcasting and/or training purposes. The Council, members of the public and the press may record, film, photograph or broadcast this meeting when the public and the press are not lawfully excluded. Thank you. So I'll just run through who is here today. As I say, I'm chairing the meeting. We have the members of the Joint Overview and Scrutiny Committee there, and other officers here are Emily Atack, who is the Assistant Director, Assets and Investment. Jan Robinson, who's the Deputy Monitoring Officer. Henriette Holloway, who's Senior Governance Officer. Bethany Webb, who's Trainee Governance Officer. And Alicia Norman, who is Technical Research and Project Officer, I think. Oh, sorry, and yeah, Melissa Evans is also here. And she is the Director for Corporate Resources. And who is this? Holly Brett, Corporate Manager. Is this the council? Is it the holding company? Or for the council's companies? Right, thank you, sorry. And I believe now, Emily Atack, you are the Director of Assets and Investment, is that correct? Thank you. And we also have our councillors present. Councillor Dave Busby, Cabinet Member for Finance, Assets and Investment at Babergh Council. Peter Gould is Cabinet Member for Assets and Investments, Mid-Suffolk District Council. And we have an apology from Councillor Malvisi, who is the Director of Cifco on behalf of Babergh District Council, and we have Councillor Rick Mayer is here, and he is a Director of Cifco on behalf of the Mid-Suffolk District Council. And if I get these right, hopefully, we also have representatives of Cifco, Sir Christopher Howarth, Cifco Board Chair, Helen Rumsey, who is a partner at Ensors, and Neville Pritchard, Director of Capital Markets, JLL. So, has everybody now been introduced? Yeah, we're all good? Thank you very much. So, can I now move to the agenda, please? Do we have any apologies for absence, please, and substitutions?
Thank you, Chair. We have apologies from Councillor Paul Epingham and Councillor Barry Humphries is substituting, and we also have apologies from Councillor Robert Lindsay.
Thank you. Have there been any declarations of pecuniary and non-pecuniary interest by members? Councillor Hinton.
Just to make matters clear, Mr Chairman, just to declare a non-pecuniary interest in as I'm a Director of Babergh Holdings, who of course are one of the owners of Cifco.
Right. Okay.
Chair, just to make it clear as well, that Monitoring Officer has granted dispensation to all directors and councillors involved in those holding companies. Thank you.
Thank you very much. we're now to receive notification of any petitions in accordance with the Council's petition scheme. Are there any?
None received, Chair.
Thank you very much. We now move on to confirm the minutes of the meeting held on the 25th of April 2022. Are there any points regarding the accuracy of the minutes? If not, can I have a proposal? Councillor Caston, Councillor Osborne has seconded. Thank you very much. We will now conduct the electronic vote.
Thank you, Chair. That vote is now in progress.
Has everybody voted? Yeah. All.
Councillor Dawson, may I take your vote verbally? Oh, has it? No worries. Chair, that's 9 votes for and 2 abstentions. That's carried.
Thank you very much. So the minutes of the meeting of the 25th of April 2022 have been confirmed. We now move on to questions by the public.
None received, Chair.
And councillors, questions from councillors, please.
None received, Chair.
Right, thank you very much. We now move on to JOS/2/2 Capital Investment Fund Company, Cifco, Capital Limited, Business Trading and Performance Report. I'm suggesting if we do not wish to directly refer to the confidential papers, we will continue in open session throughout. I'll move item 12 of the resolution to exclude the public up to the end of the open session. This is item 12 further down, so I'll remove that up for item 7 if the committee decides to go into closed session to consider any confidential part of the agenda. So the order of this item will be introductions by councillors Dave Busby and Peter Gould. We will then have a short presentation from Emily Atack and Christopher Howarth. There will then be questions from members. So can we start, please, with Councillor Dave Busby and Councillor Peter Gould to introduce the report to the committee.
Thank you, Chair. It'll be just me. I understand Peter said that he introduced it last time, but I've only got his word for that. Anyway, I'm delighted to introduce this report to overview and scrutiny today, which shows that Cifco not only continues to deliver much needed income to our councils, but also has made a significant profit this year as a result of the value of the portfolio growing by some 12%. Cifco has proved itself to be well managed and held up well during the pandemic, demonstrating the resilient and well-balanced nature of the portfolio. Cifco has invested this year to improve the quality and sustainability credentials of the portfolio, including the installation of solar panels, and is committed to continuing this further. The councils have benefited from £3.75 million of net income this year and a total of £9 million since Cifco's formation, all of which can be put into our services, helping our communities to thrive. The council showed courage and ambition in creating Cifco in the first place, and our faith in the expertise and prudence of the Cifco board is now paying dividends. I told you it'd be short and sweet. That's it. Thank you very much.
So can I then introduce Emily Atack, and I think Emily will then introduce Christopher Howarth at the appropriate time for their presentation, please.
Thank you, Dave. I think I'm going to do the first few slides, and then I will hand over to Emily to finish it off. This is a presentation on the Cifco business plan for 22-23. Next slide, please. And, sorry, I need to do that as well, well on mine so I can see what I'm looking at. And I think really the focus of the Overview and Scrutiny Committee is to look and see if our business plan is robust and appropriate for the next 12 months. Whether you have sufficient confidence in the management of Cifco, and you have quite a lot of the management of Cifco here. Does the current performance of Cifco deliver good value to the councils? And I hope we'll be able to show you that it does. Are the KPIs appropriate measures of performance? And does Overview and Scrutiny support the proposed changes to the Cifco business plan governance in future years? And really a brief update of where Cifco is at the moment. The investment phase was completed in March 2021, so this is the first year where we have not been investing. We've been looking at the portfolio, managing the portfolio, moving it forward. And of course, the focus and purpose of Cifco is to continue to generate income and add value where possible. This is something, the income obviously is very important for our shareholders, but at the same time, looking at what we can do to improve the value is very important also. And the value of the portfolio has increased by 12%. That was just over 10 million, according to the Knight Frank valuation, to 94 million, and that was at March 2022, which obviously we're pleased about. The total net income received by the councils to date is about 9.25 million. That's since the inception of the company in 2017. And throughout that time, we've continued to make full debt repayments to the councils. There were times when we were slightly concerned because of some of the effects of the pandemic, but I'm very pleased to say, been an important focus of the board, pleased to say that we've been able to make those full debt repayments to the council. I think it's very important. And the portfolio is a diverse portfolio of assets and a diverse range of tenants, and that's to mitigate overexposure to any particular tenants or sectors. And now that we've sort of come out of the pandemic, the rental arrears have been below 2%, and so we're pleased about that, because obviously it's a big focus of the board in terms of making sure that rent is collected on time. We have completed 5 refurbishments during 21-22, including works to improve the sustainability of properties. And we'll look at that in more detail later, but obviously the properties being let mainly on full repairing and insuring terms, there's only a certain amount we can do, but it's certainly a very important focus of the board, looking to see what we can do as far as the sustainability of the portfolio is concerned. And we've made some pretty good strides in that direction. The voids remain low at circa 2% of the portfolio. The purpose of the business plan is to look back, monitor the performance of Cifco Capital over the previous financial year, provide a framework and guidance for investment and management moving forward. It's obviously an important part of the company's governance, and we as directors are accountable against delivery of the business plan. So just having a very quick look at the investment market, and we do have Neville Pritchard of Jones Lang here, so who will be able to give some probably much more detailed information if people have questions later on. As we all know, inflation is on the rise, really very significantly on the rise. Interest rates have been rising, but it's a strange market because it's very much supply-led inflation. Interest rates are not particularly good at controlling supply-led inflation, so who knows to what extent that will have an effect. The investment volumes, Q1 around 13 billion, industrial assets are quite a big part of that. In retail warehousing is probably the sector of choice, the strongest choice there. There's still quite a revolution going on in town centres and some questions as to how that's going to go forward. There have been some quite significant capital value increases, but there's been a decline in the rate of capital value increases. Capital value growth year on year to January of this year was 20.7%, and that's the highest figure since 2010. The rate of growth in rental values has also declined, but there has been a modest improvement in the retail and office sectors. As you know, the industrial sector, as you probably know, the industrial sector has been extremely hot. Looking at trends for 2022, Investors are tending to focus on new opportunities. There's an increase in distressed assets trading in most sectors apart from logistics. As I said, retail warehousing is the sector of choice in retail. Rising rates and inflation will tend to intensify the hunt for yields. A lot of investors are looking for, try to find yield, and looking at that possibly through mergers and acquisitions, JVs, etc. as well. And some of the major lenders are coming back to the market. There's a stronger demand likely in the hotel and retail sectors, and certainly the flexible office market is also one that's coming back as well. Looking then just quickly at the occupier market, as I say, retail has had a very interesting time, and I think obviously what happened with the pandemic really hastened what was happening anyway in terms of online sales and taking that on. But there is some sign that consumers are thinking perhaps they've done a little bit too much online, and you can see there the peak of 36% in early 2021 was down to 25% in January. So that's interesting. There is still very definitely a place for the high street and for physical retail. So the footfall has been improving. The retail landscape has changed fundamentally, but there's still definitely a need for physical retail. There are new businesses coming to the market with different modus operandi. So, of course, we have to look as well, though, the cost of living crisis, the invasion of Ukraine and everything there is having a significant effect on the whole economy generally. Looking at offices, there's still good demand for the right stock. The big 6 office markets have been recording higher take-ups and an increase in rents. The second half of 2021, take-up was quite strong, 50% ahead of the first half, and only 4% down on the same period in 2019. As I mentioned before, flexible office operators are returning to the market. There's been a slight upward trend in supply of office space, except in Bristol and Leeds, and that's mainly from speculative development. So development is happening. There's still very much a place for offices, in spite of the working from home. And certainly growth is expected in prime rents. The very hot market, of course, has been... Sorry, do you wish me to... Shall I stop when you...
Yeah, sorry, I'm trying to get their attention. I just wanted to make the observation, and I think we mentioned this last time. I don't know about anyone else, but I can't see what's going on here. And we had this, I think we mentioned it before with the slides. If they're going to be presented, they need to be readable. There's so much on here, it's so tiny. Are we able to put it on the screen? Or is that not possible? I mean, I'm assuming he's reading it all, but I can't see what's up there.
Emily.
If I could just interject, so this data is all included in the reports that you've read. So the purpose of the presentation isn't to provide any new information, it's just to provide some headlines. So Chris is covering everything that's on those slides. We're more than happy to circulate a copy of the slides afterwards if that would be helpful. But all of the data is within the report, so there isn't anything new here. We're just trying to highlight some of the key points.
But we did have, I think Councillor Barrett mentioned this a lot. Could we just maybe next time make sure that we can see this? Otherwise, we might as well switch it off.
Your comments are noted, and we'll see what we can do.
Thank you very much, Councillor Dawson.
Thank you. I'll just highlight the main points, but as I say, I'm trying not to miss anything out. But so the industrial warehouse sector is been very powerful. Big take-up in the Western Corridor, highest ever figure apart from 2011. Available supply is down. The UK vacancy rate is down. There's been certainly a surge in rental values in most areas and very strong investor and developer sentiment. Hopefully you can see the figures here on the slide. It's just a quick summary of the portfolio from Q1 2020 through to 2021 and 2022. You can see the total asset value there in the first line. The contracted rent, we've been working hard to improve. You can see that has gone up. The ERV, the estimated rental value, has also gone up. Number of assets, obviously, from 21 to 22, was the same. Number of tenants has gone down slightly just because of negotiation of lettings of other units. The WALT, the unexpired letting term, has gone down slightly. That's to be expected. We do have a little bit of a hiatus, well, not a hiatus, but in 25, 26, there are a few more things coming to the market, so we're working hard to make sure that doesn't cause any significant vacancies in the portfolio. You can see the yields tended to come down because of the increasing value, but the running yield is still 5.36. It's producing a very good return to our shareholders. Next slide, please. Here you can see, as I mentioned before, the valuation has gone up by just over 10 million. And here is a detail of that. I won't go through it in any detail. You may not be able to see the figures from where you are, but as Emily says, you have been supplied with them. It's always a very pleasing increase in value in the portfolio. Next slide, please. And really, just to look at the portfolio weighting, it's a very secure portfolio, secure assets. You can see on the left there the split between the various sectors. There's a weighting in industrial, which has been very good, has added value, provided some very good income. The office sector is the next biggest, for alternatives at 11%, and then some retail split between high street retail and retail warehouse. And then looking at the diagram on the right-hand side, you can see that the vast majority of the assets are core long-let liquid assets, some value-added assets. We found out in our acquisition that we couldn't find any of the opportunistic assets at the right sort of price, and therefore we ended up with a portfolio which is slightly more secure than perhaps we had envisaged at the beginning. We thought we might have a small proportion in assets where there was the opportunity to add value, but at the time we were acquiring, those were rather expensive, and therefore we decided not to proceed with those. And on that, I will hand over to Emily to talk in detail about the portfolio and the way forward.
Thanks, Chris. Good morning, everyone. So as Chris has mentioned, the focus this year has been on managing the portfolio. So part of the management of the portfolio is ensuring the quality of the assets that we have, as well as looking at some of the voids that came forward as part of the impact of the pandemic. So we have actually spent around about £760,000 on the portfolio this year on a number of investments in properties. So the most significant of which was Units 2 and 3 Pasadena Way in Harlow. That property was vacated during the pandemic when the tenant unfortunately went into administration. We have undertaken a full refurbishment of that property, spending just under £500,000 on the property, including replacing the roof and also adding some new solar panels to the property. That property is actually one that's seen the greatest increase in value. So having invested around £470,000, we've seen an increase in value of around 60%. Sorry, Keith?
Sorry? Councillor Scarf, yeah?
Yeah, Chair, can I just make out the point that some of the information we're seeing on the screen is actually in the confidential papers and redacted, and we are in public session. Like the name of the tenant, for example, etc.
That's fine. The main issues with the confidentiality really relate to the lease term elements. So as this is an investment of Cifco's capital funding, that's fine. And in reality, the names of the tenants are public information in terms of the addresses, but thank you for checking. That's appreciated.
Thank you.
So in terms of the investment in Harlow, that saw an increase in value of around about 60%, about £1.1 million. So that's proved to be a really prudent investment. We've got a good new tenant in there who's very satisfied, and we've got a building that's more robust and more sustainable for the future. We've also undertaken probably the next largest investment was an investment in Renaissance House, upgrading the common parts, and we invested £100,000 or thereabouts in that element to try to attract some further tenants. There were some further smaller investments made in the other property in Harlow, a small property in Norwich and one in Coventry as well. So if we just move on, I've got some photographs showing some of those works. So this is the property Renaissance House in Epsom, and this is some of the refurbishment works that we've undertaken in terms of the common parts. So that's things like the reception areas, the halls and stairways, and the WCs. So those works were completed actually below budget, and we're hoping those will help to attract more tenants to this building moving forward. This is a project I've just mentioned at Pasadena Trading Estate in Harlow. You can see a before and after photograph there. So as I mentioned, we've seen the value increase significantly by around 60%. And we've also managed to improve the EPC rating of this property as well, from a low C to a high B. So a kind of wins on both a financial perspective, but also from a sustainability perspective as well. Next year, or this current financial year, we're looking at some further capital investments in the portfolio. We are looking at further investment in Renaissance House. We have a void there on the first floor, and looking at some options to see whether we can subdivide it further to make it more attractive to the local market. So we've got a potential budget in there of £125,000, along with £45,000 for some external repairs to Renaissance House as well. We're also looking at the EPCs of all of our properties within the portfolio, and we've put forward a small, relatively small budget of £50,000 to be able to fund some of the necessary upgrades as part of our EPC review process. So that could be a number of small amendments or changes to more units, or it could be one or two more significant investments, depending on what will help to deliver the best results. And then in terms of Lutia House and West Park House, we're looking at some capital investment to undertake some survey during the course of this year to tie in with the approaching expiries in 2026. So in terms of our key performance indicators, this table shows our performance this year. So the first KPI was looking at increasing the contracted rent from £5 million by CPI plus 1%. I think, in fairness, we probably hadn't envisaged that we'd see inflation at the levels that we have seen over this last year, but we're pleased that despite the high levels of inflation, we have actually managed to meet that target, just admittedly, but we have met that target, so we're pleased to have seen that. The equivalent yield, we've seen a slight reduction against target, but as Chris mentioned earlier, that's due to the increase in the value of the portfolio. So it's actually a kind of positive underperformance in some ways. We are suggesting next year that we look to benchmark the equivalent yield against other portfolios rather than having a target score. Again, in terms of the EPC scores, we've had a focus this year, as we've mentioned, on reducing our overall impact on in terms of sustainability. So you can see we have achieved that by reducing the overall score. It's quite a complex KPI that we devised last year, and we are suggesting a change to that, which I'll talk about in a moment, which is perhaps more in keeping with the proposed changes to legislation. And then finally, we always keep a very close eye on our rent arrears because income is very important. And you can see consistently that we have been below that 5% target, with arrears tending to be, by the end of the quarter, close to that 1.25%. So the March figures are from about 4 weeks ago. So we're actually very close to the 1.5% that we've seen over the last year. In terms of KPIs for next year, again, we have tweaked these slightly just to reflect the changing circumstances that we have. So in terms of our increased rent, with what's happening with inflation, it doesn't seem appropriate to link KPI to inflation. So we're looking for a greater than 1% increase in the contracted rent for next year. As I mentioned, we're looking to benchmark the equivalent yield. So we're looking for it to align with or be above the all properties yield, which is currently 5.3%. So obviously if that's 5.4% next year, that's what we'll be looking at. But I think benchmarking is probably a more appropriate way of monitoring our performance in that regard. With regard to the sustainability key performance indicator, what we're suggesting is that we seek to align with the proposed changes to MEES and EPC legislation, which is that by 2027, all commercial properties will have an EPC rating of C or above. We currently have just under 42% of our portfolio that are rated C or above. I think that's probably a more transparent method of monitoring our performance in that space. And then finally, the last KPI is consistent with the one that we've had for several years in regard to the rent arrears and making sure they're less than 5% of the portfolio. So in terms of the business plan for 22-23, these are the key focuses. So we're looking to retain all of the assets within the portfolio, and there are no sales currently anticipated. We do review each of the assets on an annual basis, but also on a quarterly basis to see whether we should look to consider any sales. We're looking to maximise revenue for the portfolio, and that is largely through being very proactive with our tenants and with the lease events that we've got coming up. We're retaining our focus on ESG and looking to enhance the sustainability of the portfolio holders. The portfolio. We have an action plan that we're looking to deliver. We're looking to be able to demonstrate how we've achieved against that action plan. We continue to maintain tight budgetary and credit control over the company. So again, monitoring our rent arrears very carefully, particularly, and we do that on a daily and weekly basis because it has such a big impact on our portfolio as a whole. We do need to manage lease expiries and events throughout the portfolio so that we can reduce our void risk. We look at these well in advance and look to see where we can reduce any particular pockets of grouped expiries. As Chris mentioned earlier, we do have some coming up in 25-26 that we're looking to be very proactive about. I've already provided a bit of a breakdown in terms of our capital expenditure that we're proposing for this year, but we do need to be strategic about how we use those sums. And ultimately, we're looking to implement our individual asset initiatives so that we can create more added value to the portfolio. The other thing that is really key to us, particularly in a market that we're currently seeing, is that we closely monitor what's happening in the market, and we're very fortunate to have some very good advisors in that regard. And it's really about looking at the opportunities that we have so that we can enhance value and income, but also maintain that liquidity. And then finally, it's the kind of longer term piece in terms of Cifco's resilience as a financial model to be able to deliver income back to both of the councils. So again, that moves on to the tables which are in the, I think both the report and the business plan sections that have already been published and are the tables that we've used for the last few years. So you can see the cumulative income and movements over the last 4 or 5 years or so. So as Chris mentioned earlier, Mid-Suffolk has benefited from net income of around about 1.7 million, whilst Babergh received net income of around about £2 million. And overall, the councils have benefited from about 9.25 million since Cifco's inception in 2017. So we have included the draft Cifco accounts within the papers, whilst there will be some changes to these, they are only draft accounts, but in previous years they have been requested. The kind of key headlines from that are that Cifco has made pre-tax profit of around about £9 million and a post-tax profit of around about £6.5 million. The main reason for the profit is the increase in value of the portfolio that we've seen, which was around about £10 million, around about 12% in all. So then finally, just in terms of the conclusions, so the business plan is a really important framework. It's a really important part of Cifco's governance, ensuring that we manage the portfolio in an effective and sensible way. The KPIs, again, provide that framework so that Cifco's performance can be monitored, but also so that you can see the priorities transparently from the actions that we take. The existing portfolio is balanced. It does have risk, as any portfolio does, but that's diversified across the sector, location, and tenants that we have. And this approach has proved successful during the pandemic, where we've been able to continue to mitigate Cifco's risk and the risk to its shareholders. Cifco continues to provide the capitals with an important income stream, and over the longer term, further capital growth is expected as well. I suppose the final point just to raise in terms of the report this year is we are proposing a change to the governance to really reflect that we're in the business as usual stage of Cifco rather than the acquisition stages that we had previously. So we're proposing that the business plan is approved by the holding companies, scrutinised by ONS, and if ONS think it's necessary, it can then be referred on to full council rather than it automatically being referred on to full council. Part of the reason for that, I think, is to ensure that we have a transparent and single conversation. We've had some really beneficial debates about Cifco over the last few years, but I'm conscious we hold it in 3 different places, and it might actually be more transparent if we have a single place to have that debate, and that's what we're proposing this year. So that is the end of our presentation, but we'd be more than happy to take any questions. Thank you.
Thank you very much to both of you for the presentation. Yes, open to questions. Councillor Grandon and then Councillor Muller, please.
Thank you, Chair. Thank you. They were really good presentations, and the question I have to ask, you have touched upon, both of you, in your presentation, but I just would like it clarified, please. Obviously, it's been a long time now since the inception of Cifco and since the purchase of the properties. And since then, we all know that there have been a lot of changes in the country, in the world. I'm a little concerned about the balance now of the portfolio, because while it might have seemed right at the inception of the organisation, can you reassure me that that balance is still accurate going forward? Because retail, I was always a little concerned about. Office, of course, at the time that that portfolio, the office portfolio was added, seemed the obvious and correct thing. but we all know now that work from home is becoming a bigger and bigger thing. So going forward, with organisations reducing the number of people going into the office, how will that affect our portfolio and the balance that we hold? I'm a little concerned now whether it still holds in the changed marketplace. Thank you.
Yeah, thank you very much. I think it's important to say, obviously, as we started in 2017, you're quite right, and we set things out then as to what we were intending to do. But in fact, even through the acquisition phase, we did change our focus, and we ended up with probably less retail than we had originally envisaged, certainly more industrial than we had envisaged. So throughout the acquisition process, we were changing things. Having then completed that, obviously, we now have our portfolio, and in the longer term, we will be looking at some assets we may decide that we don't wish to retain, but also, and we may wish to sell and reinvest into different assets. But also, we're looking at continually improving the quality of the assets, and Emily was talking in detail about what we've done at Pasadena Way and the effect that had in value. So that's something that the board is looking at all the time. In terms of the sectors, you're absolutely right. I mean, the retail sector, of course, has gone through a very difficult phase, which is why we ended up with a smaller part of our portfolio in retail than we might have done. As I said earlier, there is still very much a place for physical retail, and it does appear that the amount of online shopping is coming down at the moment to increase footfall. And the office sector, it's quite clear that there is still a good, strong demand for the office sector. And I mean, we have Neville here from Jones Lang, and perhaps you might, Neville, would you like really just to comment on the various sectors of the market?
Now I've mastered the switch, I can. Yes. Hello, everybody. I think if we start at the high level, the first thing to say is that the portfolio was bought as a low-risk portfolio. So rather than buying lots of things with 5 minutes on the lease and having to take a bit of a view as to what was happening in the occupational markets, then the average unexpired term on the leases in the portfolio is over 8 years. So that is tenants signed up with a contractual pledge to pay rent for the next 8 years. So whatever happens in the short term, we have a degree of medium-term cover, is the first point at the high level. Looking at each of the sectors, then the Cifco board were good enough to, as Chris says, adjust the view in line with the way the market was going in the initial investment strategy. So we've got close to half of the portfolio in industrial and warehouse properties. Now, that has performed very well over the last couple of years. The rate of increase in value is slipping, but it is still performing better than most other sectors. And there's still, across the whole country, about 1.5% vacancy in industrial and warehouse property of current supply. And so, as a supply-demand balance, there is still a very good tenant demand, and rents are still increasing. So the portfolio is set fair in terms of a large exposure to that sector in particular. Looking at the other sectors, then retail, actually the retail components of the portfolio went up in value last year. Now, we all know that there are major structural changes still ongoing in the high street. Retail warehousing was the comeback kid last year. Values in retail warehousing have improved significantly, and because the size of the portfolio precludes you from owning very large retail parks, you've not gained the full balance of that, but the retail warehousing which is in there has performed well. And so that is also, done quite well overall. Offices is about a third of the portfolio, and certainly I think none of us expected the impact that COVID has had, and now we're out the other side, hopefully. Then we are seeing people going back to the office, and working from home has certain benefits, and I think we are probably going to see hybrid working going forwards, where most people are doing 3-4 days a week in the office, but they still want to be in the office 3-4 days a week. And all of the conference calls with children, dogs in the background, and you're checking what you think, what's sitting behind you as you're doing the call, everything like that. It is so nice to be back in the office at the moment that I think there is still a very good demand for offices, and the letting market in offices actually is back to 2019 levels. So I don't think we can be completely gung-ho about it. Offices have changed to a degree, and I think from our perspective, the one thing we need to do looking forward is be particularly aware of lease expiries which are coming towards us, and try to negotiate with the tenants to see what is possible and ideally extend the leases. Maybe it means giving them a refurbished reception or something, or stairwells or something of that kind, but you can create the value out of adjusting the lease that way. And so this is all part of ongoing management, and if we can keep tenants happy, we keep income coming in, and good management means happy tenants and maintaining the value and maintaining the income stream from these properties. And so if the properties are fundamentally right in terms of location and specification at the outset, and you refurbish as necessary to make sure that they are still the dominant buildings in the local market, then you can maintain that income stream, and that's all part of management going forwards. It's stock selection at the outset, but management going forwards, and that's something which the board are very focused on at this stage. So overall, I think we're still very happy with the portfolio mix as a sector. It is a balanced portfolio, so as one sector doesn't do as well, there is still something in other sectors which may do better, and so it will continually be a balance which moves from one sector to another. But over the years, hopefully that initial strategy of getting a variety of assets should hold good. It's eggs in baskets, fundamentally.
Yes, Councillor Muller.
Thank you very much for the presentation. That was excellent. It's pleasing to see that the amount of outstanding arrears is around 2%. But can you please advise me what action you are taking to ensure that those arrears are actually cleared in the near future? Thank you.
Thank you. So we have Jones Lang LaSalle as our portfolio managers, but we also have Workman as our day-to-day managing agents. Workmen are very effective at managing our arrears for us. We have fortnightly calls going through all of the arrears. Now, during the pandemic, we've had limited options available to us because of the government kind of bar on chasing arrears. So we haven't actually been able to undertake any direct action to recover those arrears. So if you look at our arrears levels based on no follow-up action, you actually can see that we've been pretty successful, and particularly compared to other similar portfolios within the market. So we use all of the necessary actions that we need to. The first one, I think, is tenant engagement. So we've got some really good relationships with tenants. Workmen, our managing agents, will phone them up almost daily to encourage them to make payments. And that has been probably the most effective method to date. With some of the more challenging arrears, we have had to take other action, so CRA action and bailiffs if necessary. But in reality, we've only done that a very small number of times. The majority of times it's been about good relationships with tenants, agreeing payment plans if need be, and actively reminding tenants of their obligations to pay us. We do see some bad debts occurring. I think we've got around about £13,000 worth of bad debts this year, or this year that's just gone. So, you know, that's a normal part of property management, but I think we're actually very proactive in terms of minimising the rental arrears that we've had. Certainly over the pandemic, I think our rental arrears have been exceptionally low compared to others. Thank you.
Thank you. Are there any other? Councillor Scarf, and then Councillor Carter.
Thank you, Chair. Well, I'm looking at the key performance indicators, which is one of the things that we need to look at as a scrutiny committee. And we've obviously going forward for 22-23, we're looking at the equivalent yield of 5.3%. I think I understand why that is. It's because the value of the portfolio has increased and therefore the equivalent yield is going to be less. But we're benchmarking against, now I can't remember what the phrase was. Is this realistic, or is this changing the key performance indicator target more to mirror what's going on in the wider commercial world? Is it a smart key performance indicator?
So it is about changing the key performance indicators so it reflects what's happening in the marketplace. So this is probably a better evidenced benchmark, I would say, rather than one that was originally set as an idea of the type of yield we'd be looking to make. So the all property yield is a benchmark that's used across the industry and will reflect the current market conditions. If we set a sort of arbitrary yield that doesn't reflect the market conditions, I don't think it does accurately demonstrate whether we're managing the portfolio well or not, because there are certain things that are outside of our control. I think if we benchmark against what others are doing in the sector, it shows whether we're doing better or worse than that benchmark. So I actually think it's a truer and better, smarter, if you'd like, indicator of how Cifco is actually performing.
Yes, Councillor Scarf.
Yes, thank you for that. Yeah, that is quite what I expected. The next area I think I would like to focus a question on is the EPC rating challenge that the Cifco has, which to me seems to be one of the bigger challenges that you're going to have to overcome in the coming years, and not too far ahead either. We've got something like 57% of our properties in EPC D and E, I understand. You mentioned earlier in the slides a current action plan in terms of the EPC. I don't think I've seen it in the papers, because what I was interested in is how are you going to achieve those EPC ratings of C or above in what is relatively a short timetable, bearing in mind that you don't have full control over what happens to the building. So perhaps you can give us some more information on that, and also where could we find the current action plan in terms of achieving those EPC ratings? Thank you.
Thank you. So there is a table within the report. If you bear with me, once I've answered it, I'll point you to the table so that you can have a look at it. So there are a number of actions that we're looking to bring forward. So as I mentioned, in the budget we've put a £50,000 budget in relation to sustainability and EPCs. So what we're looking to do is renew all of our EPCs that are coming up to expiry. Currently you don't actually have to do that until you're reletting a property, but we're doing that as they come up to expiry, and that's so we can look at what actions need to be taken. Now, in a number of cases, they're actually quite small actions that can be taken that can have actually a really big impact. So we've already seen in some situations that things like having thermostatic controls on radiators, particularly in some of the smaller industrial units, they don't have thermostatic controls. So making some very small adjustments can actually have quite a big impact on the EPC rating and reduce the impact on the environment. As we've said, a lot of our properties, if not all of them, or very close to all of them, are on full repairing and insuring leases. So the responsibility sits with the tenant, really. But as a responsible landlord, we're very happy to have conversations with our tenants to say, we've had this EPC report, it's suggesting these kinds of measures, and having a conversation with the tenant to see whether there's an equitable split in terms of the investments that we as landlords make and those that the tenants will look to make as well. So we've got a few conversations that are ongoing currently about thermostatic radiator controls, insulating doors better, etc. We've also got some conversations going on with some of our other tenants where they're actually looking to refurbish the premises themselves. And so part of what we've been doing is saying, that's really interesting. Have you also thought about how you can improve the sustainability of your properties as well whilst you're undertaking the refurbishments? And so again, it's having those conversations to kind of prompt the thinking with those tenants. So we've got one fairly large project that we're currently looking at to see how we could do that in a partnership way. One of the other things that we've got within our action plan is green leases. So what we're trying to do is upgrade or update our leases as they come through. Again, we can't do that to all of our properties. We do have to wait for the leases to come up for renewal. But we're inserting in some new green clause leases, which again require the tenant not to reduce the sustainability of their property, not to reduce the EPC, to share information with us, because a lot of the key parts of managing a portfolio in a sustainable way is actually having some of the data so that we can see how these properties are performing. So that's quite a key element, and we've had some workshops with our lawyers and with JLL to see how we can best introduce these new green leases and green clauses into our leases. And then the other element is looking at some of the properties where we have a bit more control, and that's where we perhaps manage the properties and we have a service charge. So it might be that we're actually, we have an electricity supply. We're looking at replacing lights in common parts so that we've got more energy efficient lighting. So there's a whole array of different opportunities that we've got. Or it might even be including more bicycle storage, etc. So there's quite a lot of things we can do where we've got buildings or estates that we've got an estate charge or service charge that we're managing. So it will be a kind of incremental action, I suppose, with a number of probably smaller elements all helping us to achieve that 2027 target. And once we've achieved that, I think we'll keep going and we'll actually start to do the next step to reduce the overall rate from a C to maybe an A or a B in due course as well. So it's a continual piece of work that we're doing with multiple kind of approaches, and something that we as a board are very committed to. I think Neville.
Sorry, could I also just add that EPC assessments actually last for 10 years, and some of the assessments are actually nearly 10 years old on some of these buildings, and as well as the proactive things which Cifco are bringing forward, then in many cases tenants have, either because they have a great belief in ESG or simply because they're aware of the costs of energy and they're doing their best to save energy going forwards and their costs. A number of them are actually taking steps anyway, such that the historic assessments would now be assessed differently if they were assessed more recently. And so it's a snapshot, and many of these snapshots are actually quite old now as well.
Okay, Councillor Barrett then.
Thank you, Councillor Carter. I wanted, on the same sort of theme, continuing on the sort of the EPC and the energy and all those sort of issues, costs are clearly crucial to the success of this, aren't they? Because otherwise it all disappears in your costs or the profit. And you're working with so many different councils across the area, the places where these investments are. Are you able to fully exploit any grants, any government schemes, any additional funding for those energy saving measures?
Thank you. So again, within the business plan, we do mention that we will look to achieve any external funding we can to help the sustainability of this portfolio. So absolutely, if there are opportunities for us to obtain external funding, then we'd be delighted to pursue those, and we'll continue to do that. And not only external funding, but we also look at some opportunities that will help to generate a return as well. So the investment in solar panels in Harlow does provide a small return on the capital invested as well. So we'll look to utilise whatever financial means that we have available to us to be able to help improve the sustainability of the portfolio. There is obviously a kind of careful balance, because Cifco's main kind of purpose is to get as much money back to the councils as possible so that can be invested locally. So it's a careful balance, but certainly if we can achieve external funding and grants, then that's an aspect we are keen to pursue. Thank you.
Thank you. Is there a follow-up question, Councillor Barrett? Councillor Carter.
Thank you. Sorry about that. I am quite excited by the next steps in EPC and going ahead, and I'm always for being more proactive and being forward-thinking. Regards the sustainability of Cifco, I assume we also have a mind into the sustainability of our tenants. Regards their business practices, for people who we have as who we are landlords to. And I'm not just talking about their business practices of road usage, the business practices of what companies but we have as our tenants, but also their business practice as the staff treatment and turnover. What, as shareholders, how does it reflect on us if we have, say, warehouses, and having some experience with warehouses, I'm pretty aware of some of the poor treatment we can have there, the staff turnover, the people who are maybe employed. We have, as landlords, we have responsibility for the welfare of our tenants, which we're, as tenants, we're looking at the welfare of the companies, or the welfare of those employed by those companies, and should there be any fallout from any poor practices or any fallout from the companies that we are currently investing and profiting from, well, how does it reflect upon us?
Thank you, Councillor Carter. So we obviously as landlords don't have any control over how our tenants run their businesses on a day-to-day basis. We do, however, have some responsibility in terms of how they use our properties. So we do have regular property inspections, and I think if there are any safeguarding issues that were identified during those processes, then our managing agents who undertake those inspections would flag those. Certainly from a health and safety from the building perspective, I know things like making sure fire escapes, etc., are kept clear, again, is something that is very key to the property manager's inspection. So just looking at the overall safety of the building is something that our managing agents will do with their regular inspections. Again, I'm sure they would flag any safeguarding issues as well. But ultimately, our tenants have the right to quiet enjoyment of their spaces, so we can't interfere in the running of their businesses. Having said that, we do seek to have good quality tenants in our spaces, and so whilst we can't control their activities, assuming they do remain legal, obviously, we do, to date, I don't think we've had any safeguarding items flagged with us. Certainly from a property safeguarding spaces, any issues that have been flagged have then been followed up, so that those issues have been resolved. So we continue to be a responsible landlord as far as our kind of jurisdiction as a landlord exists. Thank you.
Thank you. Do you have another question? No, thank you. Councillor Caston.
Sorry, I don't seem to have a microphone. Yeah. Oh, yeah, no, it's on now. Yeah. Yeah, I don't want to get too hung up on the EPC because the C or above by 2027 is quite a clear message of where we're going with it. But we do, at this stage, we do start to look a lot more at the maintenance and the improvement of the assets. But my question was, do we have information on the heat and light requirement of our tenants when we're looking into EPC improvements? There's obviously different ways of going about it. You've got the low-hanging fruit way where you do the things that gets the biggest return on your money for EPC reduction, but also on the other side there's lots of different uses of these buildings that might require more of a priority. For instance, like a waiting room will need to be kept to a higher temperature than a warehouse. Is this something that we're looking at when we're looking at these EPC improvements?
Thank you. So that's all part of the EPC inspection. So the qualified inspectors who go out to undertake the EPC assessments will look at the properties and how they're being used. You might find in a parade of 6 industrial units that they'll all have different ratings, and that's often down to how the tenants are occupying and using their spaces. So what we then look to in terms of determining which works should be prioritised is really the advice that comes back from the EPC assessors. They make some recommendations in terms of the things that they think will make the biggest difference to those individual properties. And what Cifco needs to do is then look across all of that data, and we have it in batches because we'll have maybe 10 EPC reassessed at any particular time. We'll look at it in batches across that data to see what's going to deliver the best returns. But also in terms of talking to our tenants, it's also about what we can agree with our tenants. So we may have some works that might improve the sustainability of that property more than other works, but actually they're not deliverable from the tenant's operational perspective. So we have to find that balance between what we can deliver working with the tenants and the kind of outputs of that sustainability work.
Thank you. Councillor Grandin. And are there any other speakers after Councillor Grandin? I've got some questions. I'll be looking for any further questions after that. So Councillor Grandin, please.
Thank you, Chairman. The presentation included a couple of references to the term added value. And I presume that refers to added value to the tenants. I presume your first criteria is to return money to the councils in profit. How do you kind of balance that apart from maintenance? And I understand you have to keep your tenants happy, but isn't added value giving them something for nothing effectively? I understand maintenance has to be done, but that's a different thing to added value. So I'm a bit concerned you might be giving them too much and to the detriment of profits that might be returned to the council. Could you explain that, please?
Yes, certainly, thank you. So I think when we're talking about added value, we're actually talking about the value that we add to the portfolio. So we're not talking about added value to our tenants and customers. It's actually about adding value to the portfolio. But I think your question is a really good one in terms of how do we balance the needs of our shareholders with running the company and our tenants. So as directors, we have a responsibility to ensure that the company is well run and that we act in the best interests of the company. So that's a kind of a key element of how we assess everything that we're doing. We do want to get money back to the councils. That was the reason Cifco was set up. But in order to do that in a sustainable way, we need to make sure that the company is resilient and robust as well. So we do have to look at balancing what Cifco needs in order to operate for the longer term, as well as the amount of income that comes back to the shareholders, and equally what we're able to invest in our tenants. I don't know whether Chris wants to add anything further to that.
Yeah, I was just going to say, I mean, I think it is a very good question. But if you look at what Emily was talking about with Pasadena, the work we did there, you know, that capital expenditure there of 460,000. Now, that's obviously something which the board looked at pretty hard and thought, now, this is a significant amount of money. But, you know, if you look at it, we spend 460,000, but it's increased the value of the asset by 1.125 million. So those are the sort of things that we're looking at. And I absolutely agree with Emily that when we're looking at added value, we're talking about the value of the portfolio, thinking about it as far as the shareholders are concerned. So that's the important thing. But obviously, working with the tenants and it's about making the assets we have as attractive as possible to those tenants, either the existing tenants or if we've got a vacant unit to new tenants coming in. So it's all about balance. But when we're talking about added value, this is very much the portfolio rather more than the tenants themselves.
Thank you for clearing up my misunderstanding.
Thank you. If there's no other questions at the minute, they're fairly straightforward, fairly quick questions, or the answers should be quite short, I hope. On page 15, you talk about the KPIs for 22-23. KPI 1, the target was, for the last year, CPI plus 1%, which worked out at 7.27 in the end, which was good. So why should we think that a target of anything greater than 1% should be a good target for the next year? And the other was on target 3. If you know that currently 41.8% of the portfolio are rated C or above, why don't we have any intermediate targets? Why have we only got the target to be met at 2027? Why don't we, for instance, say a certain percentage by the end of the current year?
Thank you. So we hadn't expected CPI to be 6% when we set the targets last year. And actually, we'd anticipated that we probably wouldn't make that target as we saw inflation growing. So we were really pleased to see that we actually had. If you look at what's happened over the last 12 months with the portfolio, we have actually reduced the voids quite considerably. So at the end of last year, we had more vacant property because of the impacts of the pandemic. And so there was more opportunity really to grow our rental base because of that. From this year, we're actually looking at very low void rates of just under 2%. So in reality, we have less opportunity to increase the rental value of the properties or the portfolio as a whole this year because we don't have as much void property. So I think in previous years, Chris has talked about how sometimes having voids is also an opportunity as well as a threat when looking at Cifco. So moving forward this year, with the uncertainty of the economic conditions, the fact that we've got low void rates, we don't think it's realistic to set a target that exceeds the one that we've put there. So we've put 1% as a minimum target. We also have to factor in with those lower void rates, we've got contractual terms already in place with tenants. So we don't have a situation where we can just say to tenants, oh, we're now putting your rent up by 3%. It's based on what's in the lease already. So assessing the lease events that we've got coming forward, we think that in excess of 1% is a reasonable target for this year. Again, we'll review that next year, if we, by looking at what opportunities there are in the following year, looking at our performance this year, you know, it may be appropriate to increase that target next year. But the board felt that that was an appropriate, the board and our advisors actually thought that was an appropriate target to have for this year, bearing in mind where we are with the portfolio and where we are with the market.
Thank you. And the other was the intermediate targets on the EPC rating.
Yeah, and that's an interesting one that we thought about quite hard. So last year when we introduced the KPI for sustainability, we were sort of trialling how to best do that. What we found was it was a little bit clunky, but we also found that it takes some time to actually implement the new sustainable features. So depending on when the EPCs are renewed, when the work's done, when they're then reclassified, that can take some time. So again, as a board, we thought that having a longer term KPI, which we will monitor progress against annually, would be more effective than having a shorter KPI, because again, it's about making the right decisions, not the decision that's just going to meet the KPI. And it felt that having that slightly longer term KPI was probably the right thing to do for the portfolio.
Thank you. But you would be able, this time next year, you would be able to report progress on that target towards the 2027 target.
Yes, that's the intention. So within the KPI, we put the percentage that we are currently at. So we'd look to update that percentage next year so that we can show the move from just under 50% hopefully to above that figure, so we can see the kind of incremental improvements. In reality, it's not that long a KPI, so unless we make some improvements this year, it's going to be quite difficult for us to achieve longer term. So yes, we'll share that data in a year's time.
Thank you. And I've got a question on, it's the tables on pages 17 and 18. The line under revenue impact, interest paid, it goes up and then it's starting to drop off again. This is on the Babergh one. And the numbers on the Mid-Suffolk page are quite different. Why are they, the interest paid so different for the two different districts, please?
Thank you. So I might refer to Melissa as our 151 officer.
Right.
But in effect, both Babergh and Mid-Suffolk have different borrowing strategies.
Yeah.
So their interest costs are different. And so that's why the interest paid figure is a different figure, because that's the cost to the council of the debt that they've borrowed. So the figures received from Cifco at a gross level are the same for both councils, but the costs of the council's debt is different. And that's the difference between those figures, unless Melissa wants to correct me.
So they are vastly different by the looks of it. The figures are vastly different, so the way that the two districts have borrowed the money is totally different. Thank you. There was one other question I had, and Emily, this was a statement that you made, the last but one slide, which is, you said that there is a pre-tax profit of 6.5 million, made up, it's mainly due to the increase in value of 10 million. Now, if I took, that can't tell the full story, because if I took 6.5 million away from 10 million, I would come to the conclusion that apart from the increase in the value, you made a loss of 3.5 million over the year. Now that can't.
No, so the pre-tax profit was actually 9.1 million. The post-tax
post-tax profit, yeah,
is 6.5 million. So there's some deferred tax that's due so between those two figures. So the increase in the value of the portfolio was around about just under 10 million. So that's really where you're seeing that pre-tax profit coming through from. So it's as a consequence of the increase in capital value of the portfolio.
So without the increase in the value of the portfolio, there would have been a loss.
There's a small operating loss within the draft accounts, and that's because of Cifco making full debt repayments to the council, so we get all of that income back to the council rather than it being retained in Cifco. So yes, a small operating loss within Cifco this year, which we had anticipated. But yes, the increase in the value of the property, much like last year, we had pre-tax losses as a consequence of the value of the portfolio going down. This year we're seeing pre-tax profit because of the value of the assets going up. Again, we've got Helen from NSORS if there are any more detailed questions in relation to the accounts. These are the draft accounts. There will be some further adjustments to be made before they become the final accounts.
Yeah, I haven't got any sort of deeper questioning on that topic, but thank you very much for those answers. Councillor Caston.
Thank you very much. Are we able going forward to reinvest, increase the size of this portfolio in the net? I'm not talking about now, but over the next sort of 5-10 years, using the profits or the rent income. Are we allowed to do that, and would that be possible if we decided that was a direction we wanted to go down?
So the profits from Cifco can be reinvested in Cifco activity with the agreement of the shareholder. So ultimately it will be a kind of councillor's decision. We do need to make our debt repayments, and that's how the councils make their kind of net income from Cifco is through the repayment of debt. Within the business plan, you'll see that again we've retained the ability to defer payments for the next couple of years, so that there is the ability to slightly reduce those payments, as was agreed by full councils last year. But in the future, we could look at Cifco retaining more of its income so that it can be invested to increase the value of the portfolio longer term. That could be an option for future business plans.
Yeah, so, yes, carry on.
Is there, in anyone's mind, an appropriate time when that would take place? And because obviously we're in very early days of this investment portfolio, is there a good time or
No, I mean, part of our role of the board is to monitor the portfolio as it goes forward, looking to see what's happening in the market, working with Jones Lang. So it's difficult to say now that we think this is one that we might want to sell or we might want to reinvest, or this is a good sector to invest in. It's something that since we started in 2017, as I said, even while we were going through the acquisition phase, we were slightly changing our focus. And we will be monitoring the portfolio going forward to make sure that all of our assets are working well. And often when you look at an asset, it would have a sort of a value curve. You know, you do a new lease or whatever, it puts its value right up, and it may then the actual value may go down. So there may be times when we think actually this is an asset that perhaps we should sell. We can then reinvest it in something where there's more opportunity, which is at a lower point in the value curve, and therefore there's more opportunity to add value. So that's something that the board will be doing all the time, working with our advisors as we go forward. And it's difficult to say here and now there is a right time to do it, because it depends on the market. We see what's happened over the last year or two, and then with the pandemic and obviously with Ukraine and things like that having an enormous effect on the market. So to an extent, we can react to those things, and we can also look forward and think, right, what is likely to happen in the market as well.
If there are no further questions, then we will move to debate. And Councillor Humphreys.
Thank you, Mr. Chair. Well, in these wild and sort of turbulent times that are caused by world events, where all businesses are affected, and us as well as individuals, it's really refreshing to see such a good report. And the fact that somebody's doing well, so good for you. And it's down to the experts in front of us. We're not the experts. These guys are, and we trust you to make the right investments. The Harlow investment was particularly canny, and to see that return is incredible. So all I'd say is well done. I wish I had your crystal ball for my share investments because they're not as good, as my wife would tell you. All of my money's been sunk, but I'm sure they'll come back up again. So I might be calling on you for some advice in the future. But well done, good report, and it's really nice to see. My only, because you've always got to have a down bit, my only point is on page 20 where you've got a risk assessment chart. That'd be really useful for the future if you'd use a RAG system where you could put it in colour. So if it is bad, put it in red so we can see it. Because to be honest, 2, 3 and 6 means nothing to me. So, and I don't think it means very much to anybody else unless you've seen the matrix. So you put the matrix in, we'll change the colours. And that's it, it's a really minor point. So well done, and thank you for this report.
Thank you. Anyone next? Well, if there is no debate, we need to look at the recommendations or the recommendations that we would pass on to Cabinet and Councillor, I think, in this case. Councillor Scarf.
Yeah, one in particular, Chair, the recommendation 3.3, which we have discussed actually in terms of the governance model, that the business plans are scrutinised by the Council's Joint Overview and Scrutiny Committee and only reported to Council if the committee is not satisfied with the company's business plan and performance. I'm not overly happy. I can see the reasoning why they're recommending the change in the governance model there, but I'm not overly happy because Cifco, I think, is an issue wider than just the 12 members of the Joint Overview and Scrutiny Committee, and always, since I've been on this council, has created a lot of interest, sometimes controversy, etc. And I'm wondering if we make this recommendation, whether we're going to further down the line find that members who are not on Overview and Scrutiny Committee are going to go, well, we haven't got the opportunity to look at Cifco and debate it if this goes forward. So I wouldn't be happy with recommendation 3.3. I think it's of such importance, the value of this portfolio, because of the income that we receive from this portfolio, that it actually does go to council, even if it's a half an hour at council or whatever. But I think it's for council to decide whether they wish to go into it. So I wouldn't support recommendation 3.3.
Just to clarify, that is going to be a council decision. You'll only be recommending to council if you agree with that. It is a fine because council can only deal with governance arrangements. So you'll only recommend to council if that is the way you want to go forward. But it's ultimately for council to decide.
Yeah, I think that has clarified the situation, but we're not making the decision on whether or not business plans are scrutinised only by overview and scrutiny, but the converse of what's in 3.3 would be that we recommend, we've got an opportunity here to either recommend that overview and scrutiny look at the business plan and only report on if we've got concerns about it. The alternative is that we recommend that, well, exactly as is here. Am I right? But we have the opportunity today to recommend
to council.
one way or the other. But yeah, we're not making the decision.
To also clarify, ultimately it's always council who agrees the business plan for Cifco as well.
Well, that's...
You can scrutinise it, but at the end of the day, it's council that has the decision-making powers. You don't, unfortunately.
Well, I don't think that's unfortunately. I think that my reading of 3.3 is that it would only be reported to council if the committee is not satisfied. So, yeah, Emily.
Thank you. So currently the business plan is prepared and written and approved by the board of Cifco. It is then referred to the both councils' holding companies for approval. It then comes through to ONS and then to full council. What is being proposed is that the Cifco board will approve the business plan, holding companies will approve the business plan, and it will come forward to ONS for scrutiny. If ONS are not happy with it for any reason, then you could either refer it back to the holding companies and then go back through that cycle, or just refer it straight up to full council. So it's just to shorten the governance route. In reality, you know, we're already in June, this will go to full council in July. Financial year starts on the 1st of April. We're now in the management stage of this fund rather than the acquisitive phase that we were earlier, and so just slightly shortening the governance cycle seemed like a reasonable suggestion. But as the governance officers have suggested, it's a decision for full council ultimately about whether they want to retain the right to approve the business plan or not. But it would be helpful to have your views on whether that's something you would support or not.
Councillor Scarf.
Well, in that case, Chair, I mean, thank you for the explanation, but I think we should perhaps then recommend as a scrutiny committee that it does go to council for I think it's just such an important issue that it ought to.
Thank you. Does anybody have the same view as Councillor Scarf? Councillor Hinton and then Councillor Grandon, please.
Yes, Mr. Chairman, I agree with Councillor Scarf. One of the things that, if we're not careful, we're going to sort of gloss over is, as Mr. Harlow has said, that properties can increase in value, and sometimes it pays to dispose of them when they get to a high value in order to reinvest in other properties from a lower value to keep the whole process evolving, if you like. So I think it's important that full council is kept fully up to date with those sorts of proceedings. And I think for us to then say, if we don't disagree with it, then that's it, rather devalues the whole purpose of having a council in the first place.
Thank you. Councillor Grandon.
I agree with the previous comments. I think it's such an important part of, or it's become such an important part of the council business that and historically has been controversial. I think it would be wrong for council not to have an opportunity to discuss and debate. Thank you.
Thank you. Can we just hear from the Deputy Monitoring Officer first, and then Councillor Barrett?
What I would just say is, if you're going to council and council's going to have a full, if you decide that's what you want to recommend to council, and council's going to have a full debate on the business plan, I think you need to ask your question, what added value then does overview and scrutiny add to, you know, if it's going to full council for full debate, what we're trying to do is see what the added value is from yourselves, and if, you know, are we duplicating? If you're already going to have that debate at council, does it then need to come to overview and scrutiny? So perhaps the question is to turn around, does it need to come to overview and scrutiny, or should it just go to council for review? And that's just the question I'm throwing out there.
Thank you. Councillor Barrett, and then I'll come to Councillor Caston.
There is this confusion, isn't there? Because I thought we were making some recommendations to full council on this, so that the final debate can take place there. So, yeah, I agree. Perhaps it should have just gone to full council, but I think it does have to go to full council.
So yeah, as it stands at the moment, it does have to go to full council. So, you know, it's such, you've got two processes. It comes to overview and scrutiny. You make recommendations to council, but you could, in effect, shortcut that by going straight to council. So, you know, that's what councillors need to consider here. I'm not giving any types of views. You could do as Emily has suggested and just let the holding company agree the business plan with you reviewing it. That would work. Alternatively, do you need to review it, or if you want it to go to council for the debate, then should it just go to full council? And that's a question that I'm throwing out to you.
Councillor Caston.
Thank you very much. Yeah, I came to this meeting thinking it probably shouldn't go to full council, but representations here have made me think, well, it does need to be looked at. But what Jan is suggesting there, that it doesn't go through scrutiny and goes straight to full council, I think, to be honest, that is probably not a bad direction to move in. It's we have got to be careful. There's a holding company that looks after itself. We have got to make sure we add value to things when they go through, and it's and we shouldn't be having meetings for the sake of it. So my thoughts would be, if it must go to full council, send it straight to full council. I mean, if members believe it must go to full council,
if members believe it doesn't have to, the holding company can agree it, but it's a change of governance arrangements which council would have to agree. But you could recommend it, just for clarity. But I'm saying, does it need to go to overview and scrutiny and council if that's the route you're considering? Because there is a duplication.
As we go forward, there's going to be less and less of value that these committees can add to this, which does make me think there will be a time when it doesn't need to go to. It could just be a scrutiny subject looked at. The committee here is perfectly capable of looking at a report. It's what we do every single meeting, and picking things out of it. But from what I'm hearing here is it's really important because it's a large fund and everything that it goes to full council. So I believe really that it should just go to full council and not through the scrutiny committee, just to streamline things and just to reduce the danger of doing the same thing twice, the same tasks twice.
Thank you. Councillor Grandin.
Thank you, Chairman. We've spent about an hour and 40 minutes or so on this matter here, and that is the advantage of overview and scrutiny. We are able to look at it in detail, and it's such an important matter that it requires this time and detail. In a full council meeting, you would not be, I would hope we would not be giving an hour and 40 minutes to one item as important as it is, because I would have hoped that overview and scrutiny would have done the detail at a previous meeting, as we are now, and that the full council meeting looks at the overall other aspects in not as great a detail as we have the luxury of doing here. So I think we've got slightly two different purposes, and that while I understand it's taking up Cifco's time to do this number of presentations, and while it would be nice to reduce that from their point of view, I think from a governance point of view, or in my opinion, we've got two different purposes, or slightly two different purposes, in the amount of detail each type of meeting is able to give to the matter.
Yeah, thank you. I'll come to you in a minute. What I was going to say was I think that because we have the time to do this and to forensically look at it, and we can be pretty certain that we have all read all the papers very carefully, you cannot be quite so certain that every single member of council will have had the time to read all of the papers that we have in front of us now, as well as all of the rest of the council agenda papers. So I think we do add value just by having this meeting and making comments onto council. So I mean, that's just my personal view of it being more open and a more forensic look at the matter if it comes to overview and scrutiny first, just as the general fund and the HRA plans come to ONS first and then go on to council. So I think there is a similarity there. I mean, really, those are the three places where the big money is. It's in the general fund, the HRA, and in Cifco. So I think I think I would prefer to treat them similarly, ONS first and then on to council. I'm going to come to Councillor Busby first and then to Councillor Scarr.
Far be it for me to try and persuade you one way or the other, but look, the Cifco's gone through two phases. First of all, the growth phase, which was important, and it was important that we kept a close eye on that. The second, for the business plan, is how we intend, now having fully been invested, to manage those investments. What are our intentions? And we've stated that fairly clearly, what our intentions are. They won't change, I suspect, next year or the year after or the year after. Our intentions will be very similar. I can't see the benefit of both ONS and full council looking at the business plan. Full council will get to see the financial impact of Cifco as part of its financial reporting. And that's the most important thing for the council going forward, and it will get that on a regular basis. I'm not certain what we're going to be able to tell you in the next 12 months that will be different from what we're going to tell you now. And 3 years on, what will be different? Okay, maybe there's a slight change in the debts, or maybe the profits change. But profit and losses only occur when you actually sell the investment. It's only paper profit and loss at the moment. I'm not certain that there's a benefit in you doing it and full council. Take the responsibility. Full council can delegate to you guys. And that's the reason for suggesting this.
Thank you. Councillor Scarf.
Yeah, I mean, I'm still minded to say, on this occasion, send it to council. Council then makes the decision as to whether scrutiny is the scrutineer of the business plan or council is the scrutineer of the business plan rather than both, if that's the case. But I think by taking it to council, we enable the wider membership of the council to decide what is the appropriate course of action for scrutinising the business plan. They may well say that they're happy with overview and scrutiny doing it, but I think if we don't do it, this proposal is by exception only. If we have a major issue with the business plan, then I think we've missed the trick, because by taking it to council, council can make that decision. Council can, of course, reverse that decision in future as well, but it leaves it to council, which goes back to my wider point, which is a wider membership. All members of both councils get the opportunity to make that decision if they are present on the day. So I'd be happy to send it to council, and then council make the decision as to whether scrutiny just looks at it and just that's it, and then we know council gets the financial information, but just for to be assured that council, on both councils, are happy with that decision, let them make that decision.
I've got Councillor Carter and then I've got Councillor Humphreys.
Thank you. I'm fully supportive of what Councillor Scarf said about bringing the decision to council regards whether or not it goes to here or to council to decide. I would say it's definite value coming here, because whilst the intentions might be the same, we have seen in recent years that things can change like that. World events can have an impact, and how it may affect how we have our business plan, it may affect other things. So it's definitely very important to come to a body such as Scrutiny. We have the papers available that come on Modern Gov, which other councillors can subscribe to. They can look at it. We can do a bit more of an effort of going out and saying, this is coming to over scrutiny. I suggest you look at this and get back to your representatives. Do more leaning on other councillors to get hold of members of here, or even attend in person if they should wish to. We can do a push for that. But anyone can subscribe, anyone can see these papers, and anyone can have an impact that way. So it's very important, in my opinion, that it goes to overview scrutiny, and that it be here to look at it. But by all means, bring it to council so the council can say if they agree with that opinion.
Thank you. Councillor Humphreys.
Mr Chair, thank you. Councillor Grandin's points were absolutely bang on. This is the purpose of this committee, isn't it? This is what you do. And I'm not normally part of this committee, I've just come into it, but I can see what you do. And I think you're diligent enough to make the decisions that have been passed down to you from full council to be able to do that. So I don't see an issue with the recommendation at all. What I would like to suggest, though, is because there is some sort of fracture, that the recommendations at the moment, it's all voting on one. Maybe that 3.3 should be a separate recommendation to make it clear and to stop it contaminating the other two recommendations.
Yeah, I think it's clear we will have to vote on that one separately. Does anybody else want to say anything on recommendation 3.3? If not, then I would suggest we look at 3.1 and 3.2, because there is no reference in those recommendations that our comments should go on to council. And I think in the past, normally what we've done is to note the trading activity and performance, and then the next one, we recommend that council are made aware of the comments of this committee. So if you're happy with adding those two, I'm not quite sure where we are with 3.3, whether we put that to the vote as it stands and it either stands or falls, or whether the majority would seek to amend it. Councillor Humphreys.
Mr Chair, thank you. I think 3.3 stands. It is what it is. You either agree with it or you don't. That is the recommendation, and therefore we should just clearly vote on it as a separate recommendation and not change it. If Councillor Muller.
Yeah, thank you, Chair. No, I actually totally agree with Councillor Humphreys on that one. So if he's proposing that, I'm happy to second. Thank you, Chair.
Well, we have a proposal, we have a seconder, so we'll if there's any, can we take this now as it's, or would you rather we spent 5 minutes?
Chair, as far as I understood it so far, is that you would like the council to decide that the future Cifco business plan is scrutinised by the council's Ordinance Scrutiny Committee. Is that correct?
I think what has been proposed is 3.3 exactly as it's typed here. I mean, I get the feeling that there's quite a bit of dissension from that, but that's been proposed, it's been seconded. We can't have another proposal until we voted on that one.
I think we should take that vote in separately, and if it is carried, that we carry it forward to council. If it's rejected, then we'll need to come up with something else.
Right. So shall we? Councillor Grant.
Can I just ask, could you just, before we do that, clarify? I think other councillors want that as well, to clarify then exactly what we're voting for. If we, when we come to voting for item 3.3, that if we vote for it, are we voting then that it doesn't, that in future it's only ONS, is that correct? And doesn't go to council? Can you clarify that, please?
Well, yeah, I think there is a bit of clarification needed here, because we can't decide that in future the Cifco plans are scrutinised by us only. I think it's the council have got to decide that. So what we can do is to recommend to council that in future, as it says in 3.3. So I don't think we can. This is getting really complicated. I mean, we've got a proposal and we've got a seconder to do something that we can't do. So that's, I mean, that's put us in a difficult position to start off with. If what the proposer and the seconder intend is that we recommend to council that in future Cifco business plans are only reported to council if the committee is not satisfied, then I think that would be reasonable. Am I right? That would be reasonable. I mean, we don't know whether it's going to be carried or not.
Check. Can I just say,
Yeah.
so what Scrutiny are doing are, we need your views really on the business plan has been approved by the holding companies, and we seek the Council's joint overview and scrutiny committee to consider whether the current performance of Cifco delivers good value to the councils, the KPIs are appropriate measures of performance, the business plan is robust and appropriate for the next 12 months, and there is sufficient confidence in the management of Cifco. So that's the first thing that you need to agree on. And then you need to agree whether you're going to recommend to council that you review as on a committee this Cifco plan and only recommend to council if you have concerns, that you need to say that that's what you want to recommend to council, or that you recommend that overview and scrutiny still scrutinise it and send it on to council. So they're the two options that you're going to recommend to council, so either one or the other.
Right. I think I understand. Councillor Osborne.
Thank you, Mr. Chairman. Yes, I tend to agree with Councillor Busby and Councillor Councillor Humphreys and Councillor Muller. And I cannot see, you know, as Councillor Busby has pointed out, you have got a situation that could arise next year, could be in the next 3 years. So this is the place for it. But I can't see the point of actually having to discuss this on a full council, as Councillor Grandin has pointed out. It becomes a word shop. And I'm quite honest with you, we have a lot of other things involved with the councils, as Councillor Busby has pointed out. So if that could be clarified exactly where it's going to go, because I don't personally want to see it go back to a full council meeting after it's been made, and the presentation by Cifco has been excellent. I can't see the point of all of that going round in circles. Thank you.
Right. Shall we put to one side, I'll ask my colleagues here, can we put to one side 3.1 and 3.2 for the minute? And would it then be appropriate to vote on 3.3 and then come back to 3.1 and 3.2? Yes. And I'll attempt to read out what I think 3.3 is. And that is that Overview and Scrutiny Committee recommend to full council that, as in 3.3 this is now, Cifco business plans are scrutinised by the council's Joint Overview and Scrutiny Committee and only reported to council if the committee is not satisfied with the company's business plan and performance.
Chair, and if we take a vote on that, obviously if it's voted down, then we'll just default back to how it is at the moment. You won't recommend to council. You'll recommend the existing arrangements stick to council.
Yeah. But we'll have to come forward with a new proposal if we're going to do that.
Exactly.
So is that now in the blue box?
Chair, that vote is now in progress. Councillor Carter, can I take your vote verbally?
I'm just working through my head very
Okay. Chair, that's 5 votes for and 6 against, so that's lost.
Okay. Thank you. So we now have to come up with something which is almost, I guess, is almost the opposite of that.
So, Chair, we could just agree to keep the status quo. Recommend to Council that the scrutiny arrangements are kept as is.
Councillor Hinton.
If I can make some suggestions, if you look at the wording that we've just been voting on, if we then say that the Overview and Scrutiny Committee recommends to full council that future Cifco business plans are scrutinised by the council's Joint Overview and Scrutiny Committee and then reported to full council, full stop.
I would suggest we continue to be scrutinised by Joint Overview and Scrutiny because they are already. So, in other words, maintaining.
I think we need to put it in words. That's what is going to happen.
Yeah, maintaining the status quo, putting it in words. If that is a proposal.
I propose it, yes.
Do I have a seconder? Councillor Dawson has seconded that. So.
Why are you having a proposal to maintain the status quo?
Because the recommendations don't say maintain the status quo.
And the status quo is maintained anyway.
We have a proposal to do that, so.
Chairman, the recommendations in the papers all talk about the council notes Cifco's plan. It doesn't mention overview and scrutiny at all. The only time overview and scrutiny gets mentioned is it was in 3.3, which has just been lost. It doesn't say anything about status quos either, and we have to come up with a recommendation on the papers, not.
I mean, it's a valid proposal. It's been seconded. I'll take a couple of speakers because we really have had this debate through and through. Councillor Caston, and I think I saw Councillor Scarf and then Councillor Carter, and then we'll take the vote.
I'm hoping this doesn't turn into too much of a case in point of why going through too many committee meetings takes up people's time and everything. What we have now is after that vote, that proposal failed, we have a very clear indicator of the way the committee feels about it. I think if we give that failed proposal over with the amount of votes each way, that's the clearest indicator we can possibly have of the recommendations to scrutiny. Changing the wording and going back will just give us 6-5 the other way. It's completely pointless, and we don't vote to maintain the status quo. We vote to change it. So, in this point, we will go back to the status quo because it failed. So.
We probably will get it. We may well get about 6-5 the other way. We've got a proposal. It's been seconded.
Chair, we do need to deal with it because you've had a proposal and a seconder. You've got a motion in front of you. You do need to vote on it. But just another word, of course, you are just you're giving your recommendations to council. At the end of the day, council may choose to disregard your recommendations.
Of this proposal is that it will be in front of council who will need to make a decision.
Yes, and take it into account.
Yeah. So I've got Councillor Scarf and then Councillor Carter.
Yeah, thank you, Chair. I mean, I think the important thing is that council makes the decision about who scrutinises the business plan. And without sending it to council, council can't make that decision. So therefore, the proposal now to send it to council, they can then adjust it if they feel it's appropriate. If they feel it's inappropriate, that they still want to look at it as well as overview and scrutiny, it's then a decision of all members of both councils.
Councillor Carter.
I think, having heard Councillor Scarf explain it, now I've got the grasp of it. My apologies before, I was having spasms and I was trying to work out by going against the previous vote, does it mean I have to have a whole presentation to council again? But as we're looking at just council deciding that we remain as every scrutiny looking at it, I was spinning. So I think I've got the grasp of it. I hope.
Right. If this one fails, then we don't actually pass anything on to any recommendation one way or the other onto council.
If this one fails, we should be there.
Well, I haven't found it yet.
It's the blue one.
It's the blue one. So this one is that the Overview and Scrutiny Committee recommend to full council that future Cifco business plans continue to be scrutinised by the council's Joint Overview and Scrutiny Committee and then reported to council. Proposer and seconder, is that precisely what you had in mind? Okay. We will vote on that then.
Chair, that vote is now in progress. Chair, that's 6 votes for against and 1 abstention. So that's carried.
Thank you very much. Right, so if we go back to 3.1 and 3.2, do we need, are we sufficiently clear on what we'll be voting for on 3.1 and 3.2 that we don't need to take a break?
Chair, I made out a few, 1 and 2 recommendations beforehand, just now when you were talking, and I suggest that the first recommendation is that the Joint Overview and Scrutiny notes the Cifco business plan and business trading and performance and asks that the minutes of this meeting be taken into account at full council. And so that'll be 1.2, that the Joint Overview and Scrutiny Committee is satisfied that the Cifco business plan and business trading and performance is robust for 2022 and 2023.
Are we content to vote on that, on those two? They're 2 separate recommendations, 2 separate. So are we content to vote on both of those? We'll take them one at a time. You don't need them to be read out again, do you? Please. Okay. So there'll be some...
Chair, would you need them in modern.gov app, or are members happy with the ones I just read out to you aloud?
I think if we just have coming up in bright blue on here, that as read out by the senior governance officer, we would all be content with that, yeah?
Thank you. Do we have a proposer seconder for this, please? Councillor Grandin.
There were so many hands went up. I think Councillor Grandin was first and Councillor Carter was second. And we're not going to have a fight about who proposed and who seconded. Right, it's there in blue now.
Chair, the vote is now in progress. Chair, that's 11 votes for that, so that's unanimous and that's carried.
Now, I think that we've covered everything that we were expecting to cover in terms of Cifco. Yeah? There is a bit of discussion as to whether we have actually covered everything that we need to cover.
So Emily has just asked if we can cover the statement in 2.2, because although that last recommendation did cover the majority, she wants it specifically covered that the business plan has been approved by the holding companies and seek the Council's joint overview and scrutiny to consider whether the current performance of Cifco delivers good value to the councils. The KPIs are appropriate measures of performance. The business plan is robust and appropriate for the next 12 months, and there is sufficient confidence in the management of Cifco. So we can do this two ways. We can say that the vote that you've just taken incorporates that, or we can now do the vote on what that statement says in 2.2.
What you're talking. So this is, do we want to vote on whether or not we accept, agree and pass on to Council everything that's in paragraph 2.2, not in the recommendations box, but in paragraph 2.2 on page 11, or are we content that what has been already agreed is sufficient? Councillor Caston.
I think if it needs to be robust, I'm quite happy to propose that we agree to all of those.
Statement in 2.2.
Yeah, all of the statements in 2.2.
Yeah. Can we have a seconder for that then? Thank you, Councillor Humphreys. And then we'll just set that up as a vote and make sure that we put that in. Approve the statement. Paragraph 2.2 in the report.
Councillor Humphreys, may I have your vote verbally, please?
4. Thank you.
Chair, that's 11 votes for, so that's unanimous. That's carried.
Thank you very much. I think we have now covered everything that we can possibly cover on Cifco. That being the case, can I thank you all for coming along? Sorry it took so long, but I think we've got there in the end. And we have another couple of items if you want to creep out or stay. Shall we, or do you think we can run through it? I don't think it will take long. I think the rest of the agenda, there are only another 4 items. I think they should be fairly quick. Are you content that we don't take a break and we finish? You want a break? Well, all right, 5 minutes maximum then. We're now going to move on to item 8, which is the action tracker. It's on page 63. It is for noting. Are there any comments from members? I think it's very useful to have this. It is only for noting, so we move on if there are no comments. The forthcoming decisions list. Hopefully members will have had an opportunity to look at the forthcoming decisions list. Are there any comments, anything that you want lifting from the forthcoming decisions list to come to joint overview and scrutiny? As there are none, thank you. The forthcoming decisions list is for noting. Items 10 and 11, which perhaps we can take together, they are the Babergh Overview and Scrutiny Committee Work Plan and the Mid-Suffolk Overview and Scrutiny Committee Work Plan. They are pretty nearly identical because most of the meetings are planned to be joint meetings. So is there anything that anybody wants to say on the work plans? No? Councillor Hinton.
Thanks, Chairman. I just like to say that, repeat what I said at the last council meeting. There are several issues that I think overview and scrutiny, Babergh, in inverted commas, we should be looking at. Whether Mid-Suffolk want to look at them as well, that would be entirely up to them, really, coming forward. But I will be discuss those with the officers outside of the meeting rather than put them forward now for a work plan.
Yes, there will be an opportunity on, if it will probably be the 18th of July. Instead of having a formal meeting, there'll be an informal meeting to go through the feedback that officers have put together from the previous informal meeting. Anything that comes out of the chairs and vice chairs briefing tomorrow, and anything that any member of overview and scrutiny, and indeed any member of either council wishes to put forward, they can all go into the melting pot, and hopefully but at the end of that informal session on the 18th of July there will be a plan for each of the councils. And would it be possible at that time also to decide at that informal session which will be joint meetings? Because I think one of the problems we've had in the past is that we've gone forward with two separate dates in the work plans, and then normally when they've become joint meetings, one of those dates has been cancelled, and the other, and for those people, that district, their members, they've got a different date in the diary. They had kept the Thursday free, but they find that the meeting is now a joint meeting. It's on the following Monday, so it might be good to sort that out as soon as possible for the whole year. Yeah.
Really good idea. Yes, Chair, we can take that forward to that meeting.
So, that being the case, I anticipate that informal meeting will be held on the 18th of July. I think we probably need to just make sure of availability, because we need to have as many people as possible at that meeting. Although it's an informal meeting, it is as important as a formal meeting, because it's going to set the whole work plan for the whole year. So, Councillor Hinton.
Are you thinking physical or electronic? In other words, Teams or in here in the chamber?
I would anticipate it would be a physical meeting. I think it needs to be face to face in order to have a reasonable discussion. Yeah, I think that would be best. Okay, that being the case then, that concludes this meeting. Thank you very much.